The Taiwanese index, which has been an outperformer all week, continues to do so.
On the way up, the swing high is 24,472. Which needs to be broken for the market to gain some momentum.
Good numbers on a YY basis, but earnings were below what the CNBC-TV18 poll suggested.
It's going to be a fairly volatile period for all commodities in general.
It's a higher start. Sensex is starting up as well. That's 30 on the Nifty and 100 on the Sensex.
Result season so far has been in line more so rather than any surprises.
Margins are not only sustainable, but they will improve.
As compared to what it was in 2 decades ago, coming up to the level of the fifth largest economy is an achievement by itself.
The 9-judge bench of the Apex Court has affirmed the legislative competence of states to levy taxes on minerals.
Our poll was 2.1. It's come in at 2.04.
Mid-caps continue to be under pressure, and giving that company is Bank Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, this is Closing Bell, last hour of trade coming up, and it is not a very exciting day because it's been flat from the morning. 20-point change on the Nifty is what you have. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here. Nigel is joining us from the newsroom. Guys, hi, good afternoon.
Hi, good afternoon. Not exciting if you're looking at the index, but there are so many individual stocks which catch your attention and news flow surrounding metals, mining, lots of earnings reaction.
And I want to start with some good news, and this is what I was telling Prashant just before the show began, guys. I mean, I don't think we spent enough time talking about good news. So the ICMR, in association with Panacea Biotech, which is a listed company, is in the 3rd phase of clinical trials for a dengue vaccine. And we all know that we could do with that. It's a big menace in the country. So I'm looking for good news as we get into the last hour before the midweek break. Guys.
You know, every day in the evening, there's this fumigation business which happens. So, yeah, I mean, so vaccine is welcome, absolutely. But let's just quickly tell you what's going on, which is not very much, frankly. The Nifty is flat. There is no real momentum, either on the upside or on the downside. You know, the levels we put out, we've not come close to getting to those levels on the way up or on the way down. So very calm and flat, and it's a market holiday tomorrow. So I think, generally you're kind of mindful of that. Global cues had not mattered for a while till they started to matter last week. And that kind of broke the momentum in many sectors. Tonight, out of the US, you've got the US core CPI. And who cared, right? But you had the jobs data, the last monthly jobs data out of the US, and well, markets did care quite a bit. So maybe there is that at the margin as well. Market breadth is negative. Small cap index is down 0.6. The mid cap index is down 0.5. If you want to look at where the pressure is, it's PSUs, it's metals. I mean, PSU metals, and the combination is down as well. Pharma, of course, is the other sector which is seeing some cuts. And IT is the only big sector with gains of over 1%. Actually, it's picked up gains a little bit more. We'll talk about this one. So it's generally quiet out there. But there is, in terms of single stocks, not as much as yesterday, but in many cases, there is violent stock reaction in response to earnings misses, and we'll sort of take that forward as well as we go along. Rima.
Well, a quick check on the mid and small cap index. Both those indices are down close to about 0.5%. Negative advance decline ratio to boot today. And in terms of the stock-specific action reacting to news flow on the way down, you've got Piramal Enterprises down more than 10% now, HEG 8% gone, Landmark Cars, Texmeco Rail, eClerx. These are stocks with a negative tick post the numbers. On the way up, you've got Marksons Pharma, big mover, reacting to a good set of numbers. SJVN and Nykaa too is up nearly about 3%. And I think Hindustan Aeronautics numbers were also up for you on your screen. It's been a big mover. But in terms of revenue and EBITDA gain, it's been in, I think, low double digits. But there is this big other income which has boosted the profitability.
Yeah, volatility on the stock as those numbers play out. On Piramal Enterprises, of course, we'll discuss the stock as we go into more details with our guests. But I think the worry is that some of the broking notes are pointing out is the fact that a lot of the growth has come in from the retail book. And in a little part of that retail book, at least, there's some asset quality stress that seems to be building up. And that's one major reason why we've seen such a severe reaction on the stock. We'll discuss it as we go forward. Otherwise, I mean, on the large cap screen, what's holding up the green side are some of the large technology names. So your TCS, HCL Tech, Infosys, these are ensuring that there is no wider fall. Some of the consumer stocks like Titan, they've sort of reversed course. Titan was lower in the morning. Now it's again tracking gains. So that's building on, yesterday's session. Days high on Titan, so that's not looking too bad. Some of the auto stocks that have been left out in the red in the last few days, they're coming back. Bajaj Auto, Tata Motors, these would be some examples. So this is why we're not getting a wider decline, but other than that, pretty flattish trends. That's what we've got going. But Nigel, I guess mid-caps, they've been disappointing right from the start.
Well, that's right, but not as disappointing, I think, maybe in comparison to a couple of hours or so ago, because now at least the number of stocks advancing has moved up to around 900. I recall it had come down to around 700 odd. So there are pockets of the markets that are seeing some kind of buying. But in the last few days, actually, the buying in the mid-caps has been a little bit subdued. Let's see how the final 60 minutes goes. We have a weekly expiry that's going to play out to dual one that. Nifty as well as the Nifty Bank. So that's going to be rather important. Mitesh Thakkar is back with us. Hi, Mitesh. Headline index not moved too much. It's been a day of consolidation. Levels you're tracking both on the Nifty and Nifty Bank?
That's right, Nigel. Hardly any movement. And in fact, most of the volatility indicators are now starting to turn flat on the hourly and the 2-hourly charts. I suspect we might, just amble around between these levels of 24,000 broadly to about 24,500. And the next few days could be spent within this range. So trading has to be a bit on stock-specific basis. Berger Paints, we had a buy earlier as well. Even now is looking good. So just a conditional buy above 552, which is above day's high. That will be an important pivot to cross. And then take a stop at 544. Look for a target of roughly around 570 here. And a sell on Aditya Birla Fashion if it starts breaking below 308. Take a stop at about 315 and look for targets of 292.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on the metal index. That's taken a sharp knock as the Supreme Court has allowed states to collect past dues in form of royalty as well as taxes from April 2005. The only relief is that this tax arrears can be paid over 12 years, that's starting April 2026, without interest or penalties for the prior periods. Following the judgment, now states can generate additional revenues in the form of taxes on mining activities as well as on the land used to conduct these activities. Let's move straight to the stock impact then. The biggest loser is Tata Steel, as it had a provision close to around 17,300 crores as contingent liability against the claims by the state of Odisha if applied retrospectively. This amounts to nearly around 10% of the current market capitalization, but you need to keep in mind that the stock already corrected close to around 20% from the recent peak, and it was weak post the Q1 numbers. Hindalco, well, they spoke to CNBC-TV18 and they said if taxes are levied retrospectively, then it's unlikely to affect them as they do not have any pending claims. We also got a reaction coming in from Rakesh, who said that the companies with exposure to Odisha, Jharkhand as well as Tamil Nadu, they'll have to bear the brunt, and said that the total estimate, that's overdue with regard to cess is around 2 lakh crores, of which the PSUs account for around 30%, that's around 60,000 crores. He also added that there might be some kind of leeway given to PSUs by some states. Now, besides the mining companies, he believes that cement companies as well that have exposure to Tamil Nadu could get impacted. And that could have an impact on stocks like India Cement as well as Ramco Cement. Phillip Capital, they came out of the note. They said that all the captive mines will get impacted, and they've quantified the impact as 2 to 6% on steel companies, their market capitalization, while aluminium players, the impact would be minimal at around 1 to around 2%. They also add that the stock price correction presented a good buying opportunity on JSW Steel, JSPL as well as SAIL. They go on to say that Tata Steel is the most affected from the cash flow perspective, followed by Hindustan Zinc as well as Vedanta. For now, Tata Steel is the biggest loser, but clarity is awaited on whether PSUs they get some kind of leeway, particularly Coal India, since higher taxes will also impact power prices. Also prospectively, which states will levy taxes and what is the quantum? That's something that the street will look forward to. Well, Prakash Diwan is with us. Hi, Prakash. Good afternoon. Well, what a busy day. I thought I was only going to be dealing with the end of results season. But this one as well was announced earlier today. And to be fair, most of these stocks have recovered from the low point of the day. There was a bit of a knee-jerk reaction because now they'll have to deal with taxes on a prospective basis. Companies like Hindalco, well, they've recovered close to 3% from the low point of the day. Similar is the case with Vedanta. The one we know that's going to come in for a knock is Tata Steel. Your analysis on this, and will you buy the dip?
Good afternoon, Nigel. So you're absolutely right. One of the reasons why the stocks after that initial reaction have made a little bit of a comeback is the provisions in this entire judgment are not, have been probably, the negativity has been mitigated by giving much more leeway. I mean, you have a fairly long period to pay up. It's going to start next, after a year and a half. So it's not something where you need to have an immediate cash flow challenge that you need to kind of surmount. But, if you look at this, it's in a way, this was kind of hanging fire for quite some time. At least there's a decision that's been made. It's unfortunate that it's come at a time when a lot of the ferrous guys are struggling in terms of, pricing and demand upticks. But I would believe the more integrated players like JSW Steel, even JSPL to that extent, would probably be very good buys if you're looking at least a 2-year horizon. And if you don't have exposure to that. Tata Steel will also recover, of course, but of course, the impact is slightly more than the other ones. I would believe SAIL might end up getting a little bit of a respite in at least one of the 3 states. And if that were to happen, you'll see a comeback the stock making a little bit of a pullback again. So you have some moving parts yet. Wait for the dust to settle. But I would buy some of these ferrous names, given the overall picture, which is a bit soft for them. And it could remain soft. China is talking about a fairly difficult winter ahead. And if that were to be true, global prices remaining soft, you will get better levels to get into some of these things.
Okay, all right. So that's a word on some of the metal and mining stocks. By the way, we've got numbers from Mazgaon Dock, and they look pretty decent. I mean, the profits have almost doubled. That's why the EBITDA line is also looking quite smart. Stock's up about 4%, little off the highest levels of the day, but it's still up about 4%. Of course, it's had a fantastic ride in the last, couple of weeks and months. Prakash, any thoughts? Mazgaon, and we also heard from Hindustan Aeronautics, HAL. I mean, these are the market's darling stocks over the last 1 year. But do the earnings justify the kind of price action that they've enjoyed?
Good afternoon, Subi. So, that's the biggest challenge for them. Any slip up in terms of performance, and if you look at HAL numbers, profit might look very bloated given that 325 odd other income that's come in. The EBITDA margins and all are still kind of in that early teens. It's not even something which has grown very significantly. So for them to justify these PE multiples, it's primarily on the order book basis that people have bought into it, and these numbers will actually bring the reality home that it's going to take much longer than what you anticipated for all those fabulous looking order numbers to be executed. So I think it will automatically have a reset. The P multiples will have to come down, and that's going to be a painful part for a lot of people who have bought at much higher levels. I would stay away from these stocks for the time being, because there's a general drifting lower kind of a move which you see. There's nothing on the indices. Indices are so range bound, but HL has lost almost $1,000 from its peak, and you don't even realize it. So it's a lot of soft, drifting downside kind of a thing which is there, and it will continue. So I would definitely stay away. Even with Mazgaon, it's more or less the same thing. Of course, there's some other triggers that could benefit. Trajectories could be different, but the orders are lumpy. It'll take much longer to execute, and hence the P has to come down.
For Mazgaon Docks, just to put in context, the price appreciation we've seen this year, 120%. In 2023, the stock was up 187%. And in 2022, the stock was up 185%. And margin expansion is very commendable. This quarter, we've seen margins at 27.25%, which compares with 8% a year ago. But margins on a quarter-on-quarter basis have also expanded from nearly 17% in Q4. Now it's 27% margin. But let's get to Piramal Enterprises, because that slumped post its numbers. There are downgrades by CLSA and Jefferies, or bearish calls. Vamakshi joins in with the details. Vamakshi.
Well, absolutely. Let me first start off with the brokerage note that came in from CLSA. They've gone ahead and downgraded their rating on this counter to underperform and given a target price of 860 per share. They say that negative credit costs due to lower provisions as well as one-off gains supported otherwise weak operating profit performance. There are some segments of its retail book that are continuing to see a deterioration in 90 plus DPD trend, and they believe that this in turn could put pressure not only on growth but also on the credit cost. So given that those factors, CLSA has gone ahead and downgraded the stock to an underperform. Jefferies too has an underperform call on Piramal Enterprises. They've given a target price which is lower at almost 805 rupees per share. They say that low interest earning assets continue to weigh on their NIMs, but at the same time their OPEX to AUM stays elevated. So again, that is a pain point for the company. The company also utilized nearly 260 crores worth of its provision overlay in the first quarter, and as a result the net profit looks better, but the core net profit is much below the estimates, and that is mainly on account of a miss on the NII. They're expecting earnings recovery to be slow, and ROA is expected to be below 1% and ROE is expected to be below 4% in FY25 and 26. So things don't look so good, and as a result the stock is declining in trade today.
Thank you very much for that, Prakash. Piramal Enterprises?
No, I think it's fairly similar to what Rakesh shared. It's in a tough spot. It hasn't been able to recover in terms of the setback it had in its cost of funds being so high. It's going to be difficult for them to grow aggressively. At the same time, it's going to be difficult for them not to kind of have NPAs grow very rapidly. So the segment that they are in is not in the best of the sea. So this is an extension of what even MFIs are going through. And the way RBI has been coming a bit, stringently down on some of these personal loan books, it's going to be difficult for them to switch to a newer segment. Some of the NBFCs which might start seeing upticks, which are more rural facing, would probably be the likes of M&M Financial or something. You'd have to go for that. But otherwise, most of them are going to find it difficult to grow when banks themselves are looking so aggressively to grow and will be willing to set up, loans as quickly as possible for them. So the NBFC bank competition is going to just get intense, with banks having an advantage over cost of funds not being so high. So stay away from NBFCs for the timing, at least for the next quarter or so. But Piramal definitely is an avoid at this point.
Okay, that's Piramal. A lot of other sharp reactions as well, by the way. There's HEG, which is reacting to numbers on the way down, 7.5% higher. We caught up with the gold financiers, Mannapuram. Of course, the managements have been sounding very, very optimistic on growth on both the loan business and the non-gold side of the business as well. Stocks a little lackluster today. So those are some of the big reactions. E-Clerks is the other one that's been a bit of a disappointment. Landmark Cars, plenty of tail enders, and they're mostly on the south side of the screen. So before we let you go, anything, Prakash, in terms of earnings in the last 24 hours or so, anything that stood out for you where you would either take a buy decision or basically, it changes your stance to maybe even a sell or a, caution?
Yeah, so some of the numbers from the larger ones, if you look at, and the case in point is Hero MotoCorp, we've seen how they also have been kind of paying the price for being in a segment which hasn't yet grown. But probably, the weight is coming to an end in that sense for that segment to revive the more affordable side, whereas Bajaj has been moving more towards the premium side. So, I think those numbers tell you a very clear story that probably year on things would start looking up much faster for them. And there were a few one-offs which set them back in terms of profitability. But I would believe one of the most striking numbers that I saw in the last couple of days was from Hero MotoCorp. Otherwise, this is that season, that time of the season should be where you just want to get done with earnings season, and the tail enders will probably go away with, or get done with not much of follow-up through. So, look at Landmark Cars, numbers are fairly moderate, but it's not that, people are too excited about it in any case. So all this will happen in the last couple of days of the earnings season, but I would look at the Nifty numbers and primarily see some sort of an uptick there, which Hero Moto could probably bring in.
You're saying for the next 100 rupees you're putting in the market, if it's a two-wheeler stock, it will be Hero and not Bajaj. That's what you're saying, right?
Yeah, I mean, Hero numbers tell you, somehow the indication is that you probably not have as bad numbers going in the next couple of quarters because festive season will start kicking in post-monsoon. There are things which are different for Hero than Bajaj. So that's from that perspective, you're getting it at a very good level after this softness.
Okay, going to remember that. All right, Prakash, thanks very much. You have a good midweek break and wish you, of course, a happy Independence Day well in advance. We'll take a break, come back on the other side, and we'll have Nimesh Chandan of Bajaj Finserv Asset Management joining in for a perspective on the market.
Okay, well, let's welcome in Nimesh Chandan, who is now with us of Bajaj Finserv Asset Management. Nimesh, welcome back to the program. Thank you very much for your time. Prashant this side. The common refrain is that it's a little bit confusing because markets have done so well. What next? We're at that stage where flows are unrelenting, but people are also kind of struggling to find newer ideas. You've been kind of maintaining for the last couple of months that one needs to be a bit contrarian now, right? You've advocated large caps over mid and small caps. You've kind of said look at sectors which perhaps investors have ignored, although there's very few there. But I think you've highlighted chemicals, CRAMS potentially. Just sort of what's the lay of the land to your mind now in terms of where we are? Because we are coming off a bit of a sort of volatility as well, which was quickly put back behind and the markets moved on. Although it looks like in many sectors, momentum is kind of broken. You look at what's happening with PSU defense, for example, that one-way trajectory seems to be at least taking a halt. It's just been 1 week, so maybe I'm speaking too early, but what are your thoughts?
Hi, Prashant. Always good to be on the show. Well, the view is the same, actually. So if you want a cautious voice towards the market end, I am it. So the view is the same, that markets have re-rated quite a bit in the last 2 years, especially the mid-cap and small-cap space. So risk-reward seems better in large caps currently compared to small and mid. Also, a lot of the glamour stocks or hot stocks and favorite themes have now reached valuation where people will take some pause to reassess the situation, see execution of order books in some of the sectors, see how, like in this year and next year, how the progress is to what the narrative has been in the last 2 years. So we've given the valuation. Now we are waiting for execution in many of these sectors. Clearly, in this result season, you would have seen that companies, especially in mid-cap and small-cap, if they are not meeting their expectations or not able to, cater to the huge demand of numbers that people have, those stocks are falling very sharply and correcting a lot. And yes, it is the right time to look at valuations, and hence contrarian approach is important. We like overall the space consumption and pharmaceuticals. In terms of the contrarian bet, yes, last time also on your show, I said chemicals. In this year, chemicals, we will see good volume growth. We are waiting to see some price action also by the end of the year. And many of them have re-rated since the first time I came on your show in the beginning of the year, when I said this is a good opportunity to look at them. And overall favorable for domestic more than international. Some of the international business, I'm very cautious.
So IT is an avoid for you in the international business. And how else have you positioned your portfolio for this caution that's evident in your voice? Have you upped your cash levels or paused fresh investments, or at least brought them down?
Yeah, so interesting thing is we don't take cash calls. What we do is we move to areas where we find more of a defensive growth or defensive valuation. So as I said, pharma and consumer are suddenly the areas where the growth is quite good and the businesses are defensive and the valuations are attractive. So this comes as a very good package for us. So moving from, say, a very capex-oriented portfolio in the last year, we have moved in the last few months towards pharma and consumer. So those would be our high overweights. Definitely, we are a bit cautious on IT, and so we are underweight on IT, and we have maintained this underweight for last 1 year now. See, these are B2B businesses. If the client sees some slowdown in their geography and some pressure on the business, there could be some pressure on these businesses too. Growth rates are slow, although now I think for the next 2 years, even the nifty growth rate, profit growth rates are going to be a little slower than what we have seen last 2 years. So we are a bit cautious because we are watching the scene internationally, how it unfolds. Looks like the slowdown will be more protracted, and that means there could be some disappointments going forward with external-facing companies.
Hi, Nimesh. Good afternoon, and this is Nigel on this side. Good to have you on the show. Nimesh, I wanted your view on the metal stocks. A few months ago, everyone was going gaga about it. People were telling me about the good use of copper, zinc, silver, all sort of that. And, when the street gets a consensus buy call, that's when the bad news comes in. Some of these stocks have corrected 20-22% odd from the peak. Stocks like Hindustan Copper are down 30% from the peak. When you see here too much of pessimism that's coming in there?
You are absolutely right, Nigel. A few months back, there was a lot of excitement about commodities. Maybe some recovery from the bottom was seen, but it looked like a very short-lived recovery. Surprisingly, so you touched upon a very interesting point. Surprisingly, in the last couple of months, we've seen that not only metals, but also soft commodities have corrected sharply. So you see internationally, wheat, corn, soybean, all these commodities, along with tin, copper, zinc, they are either at their 52-week low, or some of these commodities are at like 5-year lows. And that shows that there is some risk off and caution within commodity markets. So the commodity markets are signaling that they are preparing for a sharp slowdown globally, and they are not expecting the global capex to be great. And I think equities should take that signal and be a little cautious about these external facing sectors.
Okay. Nimesh, hi. So, overall, what's the sense that you get from the markets at this point in time? Of course, domestic investors have learned to buy each and every dip, and money's coming in every single month, every step of the way. But could there be a possibility that we get into a period of more tempered return, something that especially newer investors have perhaps not seen? I mean, overall on the market, what would your expectation be from, say, the next 12-month perspective?
I think patient capital is what will win. So ultimately, patient capital, which is looking at good returns, participating in the India growth story, having a minimum investment horizon of 3 years, I don't think that there is any worry for those investors. Obviously, portfolios, depending on where the valuation and the growth gaps are there, will shift there. See, last couple of years have given quick profits and almost broad market has gone up. So everybody thinks that we will see very high returns and quick returns in equity markets. I think that's going to, those people are going to be disappointed. Markets now bull rally will continue, but bull rally will have its corrections. It may have a flat movement for some time. And certain areas where expectations are high, valuations are high, even a small disappointment is leading to a sharp fall. So it is time to be patient. It's not time to be negative or not bearish, but it's time to be patient and have some realistic expectations. India is on a very strong journey, the corporate sector, the economy, on a very strong footing. But it just requires patient capital to make money.
Nimesh, what about these new age tech companies? The investor appetite for new age tech companies has gone up over the last couple of months. Some of them have shown the profit potential, like a Zomato. Look at yesterday's listing, First Cry, 50% up on day one. Ola Electric has had a pretty dream debut. Are you comfortable buying any of these new age tech companies?
Definitely, many of these companies have shown good numbers. So people are rewarding them for the good numbers that they are doing. Some of the business models have really delivered good returns. So they are getting rewarded, and we've seen them move up by about 100% to 150%. Among the new listings also, we've seen a good debut for many of those. However, I always get a little worried when people start generalizing on things like whether it is new age tech companies or PSUs. Whenever people generalize, they pay the wrong price. So not all businesses deserve a high valuation because they are in a particular category. You have to go business by business. I know this is a very boring answer, but it is true that you have to look at each business on its merit. And just because something is a new tech doesn't mean you give it high valuation. Concepts do get higher valuation because they come with a certain promise or a narrative. But ultimately, if the business model is good, the execution is good, they sustain their valuations. Otherwise, the others don't.
So to round this off, Nimesh, let me ask you to get more specific, right? You're right. I mean, new age companies as a basket is a very wide, sort of a selection of businesses. So leave us with the new age themes that you think have serious wealth creation potential if the companies play it right. I mean, is it EV that you'll look at more closely? Would you look at consumer technology? I mean, that could include companies like a Nykaa or a Swiggy or a Zomato, or could it be something else? So, I mean, maybe some of the more innovative companies in the pharma research space. So leave us with the one or two of these new themes which you think investors must analyze for medium-term wealth creation.
I'll try to dissect it or put as micro as possible. So within pharmaceutical, definitely an exciting area is contract research and contract drug development. And we will see increasing inquiries with pharma companies in this area and increasing order book for them. We are quite excited about that space. Within consumer, think about lifestyle consumer. India is growing well. We are seeing per capita income rise. So who are the beneficiaries of this premiumization, this upgrades? Those are the companies to look at as the lifestyle plays or premiumization plays within the consumer basket. Within tech, obviously, we are a little more selective, but go with companies now which are executing well. There is a good story behind them. We need to see good execution. we need to see good monetization. It is not just about having huge losses now. It is about making some money. You should have a product or service where if it's so good, the customer should allow you to make 1 rupee profit at least on that. So look at those profitable companies and see who's executing the idea well. Having just a concept.
I think we lost the line there with Nimesh. But yeah, point taken, Nimesh. If you can hear me, thank you very much for joining us and running us through that perspective. Caution on the table. And I think it's kind of well taken. Even though people have gotten used to an up-and-up kind of market, it's important once in a while, at least, to put some of that on board. That's not the usual state of affairs. We've been in an extraordinary time period over the last couple of years. All right, we'll take a quick commercial break here. It's 3 o'clock, 30 minutes to go for close. We'll come back. We'll tell you what's being spoken about in dealing rooms on D Street Chatter. Nimesh helps us with that. We have some trading ideas as well. Stay tuned.
Welcome back. Keep an eye out on Sarda Energy. The stock is now up closer on 9%. Yesterday as well, the stock was up 5-6%. The street believes that SKS PAR that was pending at the NCLT, that's going to get the go-ahead. And that's why the stock has rallied closer on 15% in just 2 sessions. Even though the metal index is weak, that one has moved to the high point of the day. But it's a good time to get in. Nimesh, that's sort of a day. We had gone nowhere actually from morning. You know, we are more or less flattish. But plenty of action in the broader markets and some nervousness as well. Tell us what you're picking up.
So there is nervousness, and especially in the broader market. So the breadth seems to be quite weak today. But I guess the Nifty is range bound also because the flows are quite mixed as well. You know, for the last couple of days, I've been saying there is a large selling at a leading FI desk. Today, I think to some extent that's been compensated by buying as well. So from a flow perspective, from a larger FI perspective, it's both buy and sell as well, is what I understand from a flow point of view. I guess, broadly from a broader market point of view, there is a sense of, lack of participation from the domestic funds and from retail investors. That shows the reason why you've seen very sharp corrections in individual names, even in the broader market stocks. Basically, the DI seems to be quite inactive, and there is lack of buying from the domestic and retail investor. That explains a bit of softness in the broader market stocks today. I guess, the other sign of a bit of market weakness is, look at this first 3 days of this market. Every day we got 10% down correction stock. Sun TV was on Monday. Not very howler of a number, but just marginally weak. But just because the stock had rallied so much, ended 10% lower. Yesterday was Aarti Industries. Just a cut on the guidance, the stock gave up 15%. And today is Piramal Enterprise. A marginal miss on numbers, and the stock is down 10%. Not the numbers were bad, but because we had a bit of a preemptive rally on those names, we've seen a sharper correction. So now I think the market is looking for negative news and reacting more sharply. Divis is another example. Just one product, a small size, which might just go away from them, and the stock is up. Stock is down 5%. So that shows the kind of market texture or the nervousness which is there in the market. So broader market, yes, because of lack of buying, but on the Nifty, it's today's range bound because the large FI selling for the last couple of days is matched by some bit of buying as well.
Well, Nimesh, another indicator from the F&O market is the number of stocks going to F&O ban. Yeah. That's gone up to 16 stocks, and yesterday 14 went in there. So that's another sign of cautiousness out there.
So, I look at the data quite closely, Nigel, and there is a bit of confusion there because I look at the number of stock getting added and also the PCR. The PCR fallen sharply to 0.78. Normally, we've seen Indian market tends to bottom out around 0.65, 0.7. But at the same time, there are 16 stocks in the F&O ban. So I guess the market is a bit divided as of now. There is no clear clarity as well, and people are just looking for better short ideas and long ideas is what I can sense of the way markets are reacting of late.
Let's get to the stocks then, Nimesh. What are you picking up?
Well, so the first stock on the list is Paytm. Big move in that stock. Seems like some bit of interest is back from larger HNIs as well. Well, the deal for that entertainment business is quite pending. That can come very soon. But largely, there is an interest back in this particular name from the larger HNI community. The second name is EPL. Good numbers. It was an all-round beat this time around, and looks like some interest is back from larger HNI. So again, largely buying interest from HNI desk, and that's why that stock is also buzzing on good volumes today. The third name is Jindal Saw. Flat in trade today, but there is selling pressure. So expect high delivery volumes, but the volumes are largely on the sell side from larger FIs in Jindal Saw today. And the last is Zomato. Again, after some days of consolidation, a bit of interest is back. Good amount of buying interest from larger FIs. The flows are quite strong as well, and that's why even Zomato is buzzing in trade today.
Nimesh, thanks for that. Just a quick word on Paytm, Nimesh. The transaction which is pending, which has been reported, I think, is the sale of the ticketing business, right?
That's right. So the entertainment business is what, yes, the entertainment business is what they're looking to sell. Zomato has also clarified that they are in talks with them. So looks like the deal should be around the corner and can get announced very soon. So maybe that's one trigger. But even beyond that, because I guess that's to some extent is priced in the market as well. People are aware of it that this transaction is going to happen. But otherwise, in general, today it's not only about Paytm. If you look at all the platform companies, whether it's PB Fintech, Zomato, Paytm, all are buzzing into it. So it looks like there is a kind of a basket buying in those platform companies of late, and also because of this deal that Paytm is buzzing into today.
Yeah, absolutely. I think PB Fintech in the morning was up some 10%. It's cooled off a little bit, but still 5.5% gains there. Nimesh, thanks very much for that. So that's Paytm and others, which we will watch out for. Mitesh is with us with what his recommendation is in terms of trades, short-term sort of buy, sell today for a reverse trade day after. Mitesh, what do you have?
Prashant, the STVT on Hero Motors with a stop at 5,100 for targets of 50.10. And Havells is something, which is on the positive side. So we'll take a BTST there with a stop at 18.30 for targets of 18.65.
Thank you very much for that. Let's get to Divis Laboratory under pressure today. Kotak has come out with a report. They've got a sell call. Ekta joins in with the highlights. Ekta.
Well, yes, Divis Labs is in focus on account of a Kotak note. They've retained their sell call and a target price of 3,600 rupees. Now, according to them, one of the biggest concerns about Divis is that there could be earlier than expected generic competition in one of the drugs called Entresto. It's a heart failure drug by Novartis, and Divi's could be impacted because it is one of the largest drugs in its CDMO portfolio. Now, according to Kotak, there could be downside risk of a sooner than anticipated launch of Entresto generic, and that has increased materially after US District Court ruling, which was against blocking a pharma company MSN's generic of Entresto in the US market. Now, Kotak has not factored in a generic entry before second half of FY26. Entresto is extremely important for Divi's because according to Kotak, it contributed around 8% of their total sales and 19% of their CDMO sales in FY24. Now, generic entry, according to Kotak, is looking imminent, and it could lead to as much of a 10% downside risk to their FY26-27 EPS. Now, separately, they also believe that the valuations are expensive for Divi's, and hence you are seeing that stock under pressure on account of concerns that there could be earlier than anticipated competition in Entresto, an important drug for Divi's Labs.
All right, that explains it, Ekta. Thank you very much. Down about 4% today on the back of maybe potentially lower revenue from this drug. We have Ambrish Baliga joining us to take us through the last leg of today's trading action. Ambrish, great to have you on. Let's start with Divi's. I mean, this is one particular product around which the market seems a little concerned. The stock, I was just looking at it. I mean, this year it's up about 19% over the last 1 year also, just about a 24-25% move. So it's not been a very big high flyer, so to speak. So maybe valuations on its side. Would you look at a buy here at all?
Surabhi, I missed the stock.
Divi's.
What's the name?
Divi's.
Divi's. Yeah. I mean, Divi's at these levels I'll not really buy, and especially I mean when there's a sell call from a decently well-known broker like Kotak, I think one should stay out at least for a while. Let it correct a bit. Maybe at levels of closer to about 3,900, 4,000, I think that's the level where one could look at buying it.
Okay, so Amrish, let me ask you about one more news-based sort of, set of stocks, so to speak. This whole issue about the states levying mining royalty. I mean, the Supreme Court verdict has gone in their favor. And like Nigel was telling us that some of the companies like Tata Steel, they've already made provisions to the extent of 17,000 crore rupees. Do you think this will be an overhang, or is this just a passing thing? I mean, it's a regulatory risk and then you live with it. What would your stance be on the bigger miners or even metal companies?
No, I think, people knew this was coming, but we're not sure exactly when. And since it has come now, we have seen a knee-jerk reaction. I think this reaction will be there just for a while, maybe a couple of days, not even a week or two. So I think at lower levels, it makes sense buying into these stocks, especially Tata Steel, NMDC, even a Vedanta, and also stocks like Coal India. Because, if you're talking of the next possibly 18, 24 months, I think it looks extremely good even from these levels. So normally, we should utilize opportunities like these when there's a correction due to some announcement, utilize that to buy into them.
What about a Hero MotoCorp? The stock is down close to about 3.5%. Q1 earnings were a miss. The management clarified that the ICE margins are higher. It's just the investments in EV have impacted margins by about 200 basis points. But the stock is still under pressure. Where do you stand on Hero?
No, I wouldn't be too negative on Hero and two-wheelers overall because the sales will continue to be robust, and I think going ahead we will see decent amount of increase in sales, especially from tier 2, tier 3 as well as rural. And what they're saying about EVs, yes, the investments which are being made now will not give immediate returns. We have also seen that as far as Ola is concerned. The IPO just came, and I think everyone has had a look at the financials. So I think as far as EVs are concerned, give them another 2 years. But one good thing is they've been among the early movers among the listed players. So I think that's a positive. So overall, I would be positive on Hero, but in case we see a correction closer to about 4,600, I think it's a decent level to again start buying.
Okay, hi Amrish, good afternoon, good to see you in. What about a stock that you normally give us? Today, do you have something new for us?
Yeah, It's from the hospital space, Krishna Institute of Medical Science, known as KIMS. It's one of the largest corporate healthcare groups in AP, Telangana, and Maharashtra, with about 12 hospitals. And they are providing multidisciplinary integrated healthcare services with focus on primary, secondary, as well as tertiary care. Currently, the bed capacity is about 4,000 plus, with about 1,600 doctors. And growth has been through multiple acquisitions. And now they are doing a capex of about 2,000 crores. This is for 5 greenfield hospitals and 4 expansion in the current facilities. I mean, this should be done possibly by the last quarter of FY26 in phases. And they'll be adding about 2,400 beds. And the capex per bed is about 84 lakhs, which is decently less. I mean, if you look at the sort of facilities they're providing, I think this is decently less. If you look at the ROC, it's decently good at 30%. Net debt equity ratio is about 0.75. I mean, this is good because of the strong operating cash flows. And if you look at the Q1 numbers, they were decent, about 14% Y-on-Y as far as revenue is concerned. Even EBITDA margins have increased to about 26%. So I'm expecting an EPS of about 58 for FY26. And the target price works out to about 27.25.
All right. KIMS, the hospital company, is what Ambrish's pick is. Ambrish, thank you for that. Stay with us. You know, we'll take a quick commercial break here, but we also want to remember the big bull, Rakesh Jhunjhunwala, on his second death anniversary. Always an India optimist, someone we actually spoke with throughout, I mean, over the last 25 years here on CNBC-TV18, and a day where we all miss him. Just leaving you with some images, some pictures of Rakesh Jhunjhunwala.
Welcome back. Well, select stocks in the broader markets are calling for our attention. Infra has recovered all of its losses today, earlier today as well, post that mining verdict that we got from the Supreme Court. We did see the stock corrected. Now it's moved back into the green. And from the other sector that I track, you have Orient Cement. In the last few days, the stock has corrected from 380 rupees to around 320 rupees odd. Amrish is still with us. Amrish, what are you making of Orient Cement? Everyone was confident that that deal is going to take place. I'm not sure whether it's delayed or it's off the cards, but for the time being, the stock has seen a good 15% correction from the top. Your view on Orient Cement?
In fact, see, going ahead, as far as the cement space is concerned, we'll clearly see more of consolidation. So it's decently clear that sooner or later this will get taken over, no doubt. And if one goes by the sort of money which people have made in India Cements because of that takeover, I think that's still fresh in people's mind. So I think Orient, on a further correction, I think it's corrected decently well, but possibly either 5 to 7% more correction from here. I think one should just buy and hold, possibly with a view of the next 12 to 18 months, saying that within that time, the deal should happen.
Amrish, have you booked profits in any of your stocks? You keep telling us about buy ideas, but what about the reverse?
In fact, I keep booking profits, at least some profits at the target price. And in case I revise the target price, then possibly I just book about 25% and hold on to the balance. So that's, that has to be done on a regular basis, because that's one discipline which I've been following for long. Unless, of course, I see, the target being revised by either 50% or so, that's the time I hold on. If the target is just revised by about 20 to 25%, I keep booking out at every level.
Okay. Just look at some stocks flying in the last minutes of trade. Metro Brands, should pull up the intraday chart over here, because I think in the last half an hour or so, the stock has just completely taken off. It's now about a 6% up move. Yeah, it's quite dramatic, really. And this is after Metro, did not come out with a very hot quarter. Most of the shoe companies have had a pretty soft quarter, tepid demand, and Metro was no exception. But right now, there's some brisk buying on that one stock. Amrish, have you had a look at it? Either Metro or Bata, or even I remember Campus Activewear wasn't very active. I think it's been mostly flat to subdued for these companies this quarter.
In fact, I've not tracked Metro very closely, but Bata clearly is on my buy list. I've recommended this stock earlier on the channel. And in fact, my target price is about 1,920. In fact, I'll hold on for those levels because anyway, we've seen some correction in the recent past post the earnings. But then this target price I'm talking for the next 12 to 15 months, I think that should be achieved.
By the way, Ola Electric is also coming for buying. It was flat through the morning, now up close to about 2.5%. And MTNL reported their numbers, very ordinary numbers. The net loss stands at 779 crore versus 798. But MTNL is now up close to about 5%, locked in an upper circuit. Amrish, on PSUs, the numbers have been hot and cold. Some of them are okay, but you've got some misses in the form of RVNL. Do you think anything that stands out for you in terms of a trend that you would like to highlight to our viewers?
No, in fact, at this point of time in the PSU space, and especially in the defense PSU space, I would be very, very circumspect, because like earlier, the sort of P's we were talking of, today we are applying the same multiple to turnover. So, like P is clearly out of the window. We're talking of multiple on turnover. And no one really has been talking about the execution risk. And recently we've seen that as far as HL is concerned, the sort of delays which is happening. And I think that's applicable across the defense space, because it's not possible to increase your capacity overnight, or even over the next 1 or 2 years. It's difficult to increase the capacity the way the orders are coming in. So somewhere I think there'll be a constraint, and that has not been discovered by the markets, which have made them multi-baggers in the last 2 years. So I think the correction could be decently deep when the market realizes this, when you start getting news on execution delays. So at these levels, clearly, I think it's time to book out to a large extent, because even if you sell, 25-30% of your portfolio, you have recovered much more than than the capital which you have invested. So I think it's a good time to book out still.
Okay, all right, Amrish, we will leave it on that note for today. Thanks very much for joining in. Just have about 2 minutes to go before the market closes out. We have just a 7-point up move on the Nifty. So it's been a very quiet sort of a session. The losers include, of course, Divi's because of this Kotak note, which is raising some alarm bells around one of their key products. Hero MotoCorp was a pretty sharp negative result reaction, 3.5% down. Even Eicher had a weak run today, actually. So some of the two-wheelers, not that hot. But if you look at the other auto names, Bajaj Auto has had a more decent run, which has been on the upside. Anyway, continuing with the story on the red side of the screen, a lot of the commodity stocks, of course, metal and miners hit because of the Supreme Court verdict in favor of states in terms of collecting additional royalty. So you have names like Coal India on the lower side. Tata Steel has been weak as well. So these are some of the weaker links today. Other down stocks included in Ultratech Cement, Dr. Reddy's, also JSW Steel, Adani Enterprises, and ONGC. So that brings up the list of the losers. We have tech to thank today, actually, for the fact that the Nifty didn't see a wider fall. TCS, HCL Tech, Tech Mahindra, Infosys, actually all of them, Wipro, big technology move in the last 1 hour, LTI, Mindtree included. So all thanks to the tech big boys, we didn't see a wider collapse.
The Nifty IT index ending with a gain of 1.5%. Mid-cap index ends in the red, down 0.5%. Negative advance decline ratio. More than 1,500 stocks ending in the red. In terms of big gainers, you had Marksans Pharma, EPL, also up close to about 12%. Paytm, PB Fintech, some platform companies coming in for buying. Ola Electric moved up in the last 1 hour of trade. You had SJVN post results. PCBL, Philips Carbon Black, also surging 3.5%. On the way down, Piramal Enterprises takes a big hit. Stock down 10%. You had NMDC under pressure. Lemon Tree continues to see cuts, 3.5% lower on Lemon Tree.
All right. By close, you had about 1,050 stocks which were higher and about 1,600 stocks which were lower. So market breadth also negative. But by close, nothing very much at all. It's absolutely flat. 4-point change on the Nifty, 24,143. So you're basically ending on the Nifty like almost at where you were yesterday, same time. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thank you very much for watching. But, programming continues, markets forward. Surabhi and Nigel will take you through that. Stay with us.